A lessee and a lessor signed a 5-year contract, where the lessee leased some equipment to be used in his own business. The lease payments are $50,000 payable at year end. Both the lessee and lessor cannot terminate the lease during the first 3 years. The lease contract includes an option that allows the lessee to extend the contract for 2 additional years without the consent of the lessor. Based on the lessee's business circumstances and conditions, there is a reasonable certainty that the lessee will extend the contract. In addition, the lessor requires the lessee to guarantee that the leased equipment will have a fair value of $500,000 at the end of the lease term. If the fair value drops below that amount at the end of the lease term, the lessee is obligated to make up the difference for the lessor. Based on the lessee's assessment, the lessee assessed that an amount of $70,000 shall be paid to the lessor at the end of the lease term. The interest rate implicit in the lease is not readily determinable. The lessee's incremental borrowing rate as of the commencement date is 6%. At the end of year 4, the lessee assessed that the fair value of the leased equipment when returned back to the lessor will be $500,000 as originally expected, and thus the lessee is not required to make any payment under residual value guarantee. Account for the original lease transaction on the commencement and reassessment dates. Before calculating the lease liability of the original lease at the commencement date, let us figure out the length of the lease term. The first component of the lease term is the non-cancellable period, which is the first 3 years of the contract, since both the lessee and lessor cannot terminate the lease contract during the 3 years. The example mentioned that the lease contract includes an option that allows the lessee to extend the contract for 2 additional years without the lessor's consent. As we explained in section 4 about the determination of the lease term, the optional period is included in the lease term if 2 conditions are met. First, the lease should be enforceable during the optional period, and second, there should be a reasonable certainty that the lessee will exercise the lease extension option, or not exercise the lease termination option. Here in this example, the lease contract is enforceable during the additional 2 years of the optional period, because the lessee can extend the contract term for the 2 additional years, and the lessor cannot decline that extension. If the lessor can decline the extension, then the contract is not enforceable during the optional period. As for the second condition, the example mentioned that, based on the lessee's circumstances, there is a reasonable certainty that the lessee will extend the contract term for the additional 2 years. Given that these 2 conditions are met, the optional period is included in the lease term. So, the lease term here is assessed to be 5 years as of the commencement date. Now, let us account for the original lease. These are the schedules for the calculation of the lease liability, and the right-of-use asset on the commencement date. The lease liability at the commencement date is the present value of the periodic payments of $50,000, discounted over a lease term of 5 years that we just figured out, using a discount rate of 6%, which is the lessee's incremental borrowing rate as of the commencement date. Note that the $70,000 here is the amount that is expected to be paid under the residual value guarantee based on the lessee's assessment on the commencement date, and therefore is added to the periodic payment for the last year. The right-of-use asset includes only the initial measurement of the lease liability on the commencement date, as the example did not mention any other components to be included in the right-of-use asset. And this is the entry that should be booked in the lessee's books to recognize the lease transaction on the commencement date. And this is the lease amortization schedule for the original lease. And the journal entries to be booked in the lessee's books annually after the commencement date. Let us continue with our example. At the end of year 4, the lessee assessed that the fair value of the leased equipment when returned back to the lessor will be $500,000, and thus the lessee is not required to make any payment under residual value guarantee as was assessed on the commencement date. So, The lease liability should be reassessed again on the date of reassessment, the end of the 4th year. So let us redo the lease liability calculations. This is the original discount rate of 6%. And we will use the original rate, because according to the standard, this is a change in the amount expected to be paid under residual value guarantee, and thus the original discount rate should be used. Insert the number of the remaining discount periods. The remaining lease payment is only 50,000 instead of the original payment of 120,000, because we took out 70,000, which is the amount that was expected to be paid by the lessee under residual value guarantee, and that expectation is no longer valid based on the lessee's assessment on the reassessment date. And this is the discount factor. Then the reassessed lease liability. Let us adjust the carrying amount of the right-of-use asset. This was the carrying amount of the lease liability of the original lease at the end of year 4, just before the reassessment date. And this is the revised carrying amount of the lease liability that we just calculated here. And the difference is the adjustment that should be booked in the lessee's books to reduce the lease liability to the new carrying amount. According to the standard, the right-of-use asset should be adjusted by the same adjustment done to the lease liability. And if the reduction resulting from that adjustment was greater than the carrying amount of the right-of-use asset, then the right-of-use asset should be reduced to 0, and any remaining reduction should be recognized in the profit and loss. So, this is the carrying amount of the right-of-use asset at the end of year 4 just before the reassessment date. And this is the figure for the required adjustment. And since that adjustment is greater than the carrying amount of the right-of-use asset, we will reduce the carrying amount of the right-of-use asset to 0. And the remaining amount of the adjustment shall be credited to the profit and loss. And this is the journal entry to reflect the adjustment. Now, let us complete the lease amortization schedule here. Nothing is changed in the data of the first 4 years. Insert the revised balances for both the lease liability and the right-of-use asset. And they are also the beginning balances for year 5. The interest charge is calculated using the original rate of 6%. Here is the lease payment of 50,000 for the remaining year. Complete the calculations, and we are done with the lease liability. As for the right-of-use asset, the carrying amount is 0, so there is no depreciation charge. And that is all for this example and this lecture. For an example about a reassessment that should be done as a result of changes in the rates and indices on which future lease payments are based, we already saw an example for that in this section, Section 5 Lecture 4, when we talked about the components of lease payments, so please review it.